Alright, this brings us to multiple time frames. Now, multiple time frames is very important for our analysis, and we always utilize it, and you've probably seen it in all of my videos as well. I'm always looking at monthly, weekly, daily levels. Why? As we talked about this before, big fish eat little fish. So let's go with this multiple time frames and check out a few examples so you can get your head around it. Multiple time frame analysis is the best technical analysis approach to understanding the bigger picture. We touched on this before, and remember, always trade in the direction of the higher time frame. It does not matter whether you're a long or short term or a day or intraday trader. In any case, we want to keep an eye and have an understanding about what is going on overall. Smart money's point of view. Smart money, obviously the banks, the hedge funds, the big guns, which we really want to flow with. Okay, and also in the multiple time frames, like I said, I use the monthly, weekly, daily, hourly time frames. But actually, if you're going to day trade, you don't have to go all the way into the monthly, weekly, and so on. But having said that, knowing the monthly, weekly price levels is obviously important. Okay, if you're day trading, your trade is, going to be within the day, or sometimes you may keep a position for a few days, like we do, from sometimes one swing day to another swing day if we have a target down the line. There are two ways to do it. You can either trade every day in that direction until the next swing day, or you can open a position and then keep it and keep adding your adding positions on until you get to that target, so which can lead you to have a position open overnight. But if you're not a fan of that, you can just at the end of the day get in and get out every day until we hit the next swing day. In any case, though, whatever you're doing, it's important to know these monthly, weekly, daily levels, because those levels will be strong, and if the market gets there, we don't want to be staring at it. We want to be on top of our game, managing the trade. Okay, and these levels of support and resistance are going to give us the overall market structure, while the smaller time frames, like the 4 hour and the 15 minutes, or the 1 hour, the 15 and the 5 minute, they're going to give us like getting in and getting out kind of levels, because otherwise it's going to get too choppy and you're going to get chopped up trying to trade in between levels. Okay, you can choose any time frame you like. I like to use the daily and the 15-minute charts. Some people use the 4 hour and the 15-minute. It's all good. You have to decide what you're comfortable with. Okay, and this is really, really important, because everybody's style is a little different. But in any case, I wholeheartedly recommend you check out the monthly, weekly, daily levels, price levels, before you do you enter a trade, so you see where you're at. All right, so let's take a look at some examples and let's move forward. So let's open up a chart here. This is NASDAQ. Okay, so this is NASDAQ. Let's take a look at what we have here. All right, we can do anything we like, and let's take it from the monthly. Right, let's go all the way back. So this is NASDAQ monthly. So what we'd like to see is look for places where there is manipulation and the market reversed and did a big push up. So straight off the bat, you can see here a red bar. Okay, and that's nice to see. And then you can see that this was such a good push that they actually broke above the resistance. Now, resistance levels, the market, people in the market draw it like this, just like a straight level. But what I like to do is, if you took any other technical analysis course, you might have also seen support and resistance like this, market going into, you draw a trend line or a top to top, and you see the market breaking out. So this is a double way of confirming it. So we've got a level as a horizontal line, and there's also, as you can see here, this green line. In fact, let's change that so that we can see it a bit better. I don't want to do ray to the left, and I actually don't want to do ray to the right either. Okay, so we'll just do it like this. Okay, and as you can see now, that becomes your resistance line, and the market breaks out. Now the reason I wanted to show you that is because sometimes in the market may come to this horizontal line, okay, which is fair enough, but sometimes you see how that touched right on the line there. Let me make this a little bigger, maybe I can. There you go. All right, you see how this line, if I take it exactly to the top of that bar, always draw your lines top to top, you'll see that touch the line exactly. Okay, now that level is important for us if you're trading. Okay, it's called a goodbye kiss. You'll often see it, hear me mention it in the videos, and you'll see it in the videos as well. Okay, so this is a breakout bar, correct? This has broken above this resistance line, this trend line kind of thing, closed above it, goodbye kiss, pushing forward. Now this is a monthly chart, but you can see the same things on any time frame when you're trading. Okay, so that's that. So here is also another one. All right, so this is also a nice level, as you can see. So on the monthly we already have two levels, and I always do say, guys, if you have a situation like this, and this is quite close to the low, as you can see, I'd like to take the low bar. Okay, why? Because this is where the low is made, and there is a principle that the manipulation bar when going up is the last red bar before the market goes up and starts breaking out, as it did in this level here. You see how this level got broken out, but I like to keep the low price and the high prices when I'm selling, in regard. The reason is that's what the market did. So I'm not going to just base myself on the color of a candle. I will take the low. Yes, that is the manipulation, but I will take the candle that made the low. Or if I'm selling, I will take the one that made the high. So this is a pin bar here. I will extend that here as well. Okay, so on the monthly, as you can see, we can already see where we want to get back into the game. You can also extend this line all the way, let's say here. Okay, and if the market does come back into this zone, it touches this line as well, and it's in line with this level, you can. Okay, there's another slight detail here which we haven't touched, but we will later on. It's called a gap. Okay, so the market, if it does come back here, this may not be a very strong level due to this gap here, but I will mention gaps later on, so don't panic. Let's just pick out the levels according to the bigger time frame and the smaller time frame. Now let's get back in and turn on the weekly one. All right, so now this is the weekly. Now as you can see with the weekly, now we can narrow things down a little bit more. That was the whole month. Now I can say, well, the weekly is actually there, isn't it? So that's the bar I want to be taking. And if I take a look at this, I can say, well, you know what? This is the bar here, and I am going to take the low, so I'm going to use that bar. And on the weekly, as you can see, that actually is a red bar. Okay, but it doesn't really matter. Always make a habit of taking the low, because that's what the market did. That is a price the market touched. So stop losses will be below that if they want to sweep them. Okay, so that's the weekly now. Now, is there any more? Now, as I extend the time period, you can see also that we have other places that the market can come and buy. And this is another level which caused the breakout of, is it this one? Yes, it's that resistance line there where the market, as you can see, broke out. So that's also fair. I'm just going to delete that now. Okay, so let's get rid of that so we don't have too many lines. And there's a long wick here, as you can see, where the market bought and then smashed back up again. Now look at the candles here as well. A few things you should notice with the candles. See how nicely they're going up. Okay, they're big push candles going up. And here, all of a sudden, we're kind of like up, down, a little bit, chop, 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 chop. and then the market kind of reversing. If you know other technical analysis methods as well, you can use them too to kind of check where the market is now reversing. Now you can see in the bigger time frame that this level has been broken. Okay, so now this is going to be a level of interest for us because the market is now reversing since we've broken out. If it goes back up again, I'll be thinking about, well, where should we be selling in order to go further down into these target levels here. This big wick is obviously important. Okay, so when you see a long wick, just look out for it. And as you can see, that's due to this bar here. See the last red bar? A sudden push into a level where the market starts to pick up. Okay, and then it broke above that level. Okay, and then as you can see, the market started pushing upwards. Let's just make this straight. There we go. All right. Okay, so that's how you can kind of, match things to your demand and supply zones, where the market is buying, where they bought before, and you can see they're like pretty close here. And as I demonstrated in this as well, you can see here, let's make this a little bigger. All right, once the market breaks above the resistance, you see the resistance there, what the market likes to do, it comes back to that goodbye kiss again, doesn't it? There you go. So that's your, whoops, I just want to make it straight so you can exactly see what's going on. See, that's the resistance there. The market breaks it out, which also broke above that resistance. But you see that resistance line there. See how the market comes back. It's a goodbye kiss, and then you can push it forward. Now, for us, just drawing these lines is really, really practical, and it helps us a lot. And the reason it helps us a lot is this. Let me show you why. For example, if we go back into a smaller time frame. Now let's get into the daily, and it'll be a bit more juicy for us. So here we are. Right, now in the daily, we can even make things a little bit more interesting by bringing them down, okay, into the red bar where the market took off. Okay, so we can adjust these levels, and in the daily, as you can see, the market will be a bit more forgiving, because we'll have these levels where the market's shot up. You can also take this bar here as well, okay, which is pretty much the market coming back into here. All right, so let's take a look at the daily now. Obviously, we're trading with swing days and swing hours, so the daily is more important, and you can see here how as we moved from the monthly to the weekly, we're kind of like tightening up the zones. All right, so but like I said, why is this so good for us? Well, whenever we have a breakout, whenever we have a pullback, we can actually check if this is a day worth trading or not for us, isn't it? So for example, let's take a look. Let's make this a little bigger, okay, and we'll see. Let's see what we have here. For example, we have on the daily, let's use this one, okay, we have a top and we have a top. You see, this is the place where the market broke out, okay. That's the manipulation zone. You see how nicely it broke out. So we're going to use this on a daily basis, right? So we can mark these in level. We can mark these levels like this as we go along. Now, every time we have a breakout, if the market comes back, we can check if it's a swing day or not, and then we can act accordingly. For example, we understand this is a resistance and the market broke out. Now we're coming back to test it. Now, when the market is falling like a brick, coming towards you like a fast train, the last thing you feel like doing is standing in front of it. And you also have a dilemma. is the market going to bounce off from here, or are we still going to come down into this manipulation bar and fill in a little bit of a gap here? All right, let's see if they did fill in this gap here. Well, they nearly did, so we could call it a gap fill as well. All right, let me just get rid of that again so we don't have too many lines. So how does knowing the swing days really help us out here? Well, if the market comes back, I can check if this is a swing day or not. So if during this week, so this is the 19th of April 2024. So let's actually take a look at the 19th of April. So let's come here. Let's bring this up here. Okay, this is this week. So we have to go to April 2024. So let's take a look at April 2024, the 19th of April. Now, first of all, I have to check if that's a Monday or not, because I used to put the swing days on the Mondays, right? So that's a Monday, Tuesday, Wednesday, Thursday. So the 19th of April is actually a Friday, and I would have put the swing day on a Monday. So that's a NASDAQ. So let's see if NASDAQ had a Friday. Well, NASDAQ had a Thursday or Friday. There we go, okay? And that's the 15th of April, okay? That's a Monday, and on Monday I used to put all the swing days. So the end of that weekend is going to be Friday, which is going to be April the 19th. Okay, so that's your Monday and April 19. Well, let's take a look at the April 19. Actually, I want to go back into April 19. And the reason I'd like to go into April 19 is also I want to check the hours. Okay, maybe we can catch the hours as well. April 19. Let's go back into April. So we know April 19 is a swing day. Okay, that's a Friday. So April 18 and 19. All right, so that's, first of all, is a swing day. So that's great. That's a Friday. What I can also check is, what about Monday? What about next week? Because if that's a Friday and it's a swing day, next week I'm also going to be like, yeah, that was a swing day. We just made that, so I want to buy. Okay, why? Because we came back, did a good buy kiss, and now we can go up. So what I want to check, obviously, on the 19th of April is also the hours, right? And you can see here the market closed really low. So that 10 o'clock, 9 to 10, and the closing was exactly on there. So if I turn this into a 1 hour, that's going to be 1 year pretty much back. Let's see if I can catch it into a 4-hour chart and see if we can do that. April, that's the end. So we're looking for 19th of April, going all the way back. Here we are. Okay, so that's it there, 19th of April. Now that's the opening. Okay, so look at that, that's the closing there. So that's the 8 o'clock bar, the last 4-hour bar. That's where the market makes a low. It comes and touches that exact line, okay, and then starts to go up on Monday. Okay, so by knowing that this is a swing day and we've come to a goodbye kiss, then you say, well, that bounced off my hours, so Monday would like to go up. So on Monday, then obviously what I'm going to do is I'm going to look for the swing days, the swing hours for Monday, aren't I? All right, so that's how it's going to work out for us. And if I go back, then I'll have to check, okay, on Monday, let's take a look. That's the Monday, the 22nd of April. So on 22nd of April, I want to be looking and checking out in the New York session where I can dive in. All right. So now I've got 425, 6 to 6:30. Now I can come in here. Look, that is your 4 o'clock bar there. So 4 to 8 o'clock is right there. And that's exactly when they did it in New York. Market comes back, goes up. All right, so it's all good. So that's how you can kind of like measure it And then you can see here as well on Monday, the next swing days for NASDAQ are Thursday and Friday on this bar. So the 23rd and the 24th of April. So that means we can now follow that into the 23rd, 24th of April. And this is the 23rd of April, as you can see, 23rd. And that's the 24th of April, all the way there. And that's your 24th there. Market making a high and selling off. Okay, does that make sense? So, you know, if I know the days and the hours, I can like, okay, you know, I've made a good buy case. It's a swing day. Let's just use the hours as well and flow with it. And on Friday, I don't trade, but, you know, we could definitely take it on a Monday. All right. So I hope that makes sense. So going back, let's go back into our daily chart here. All right, if I go back. So as you can see, just by doing simple lines, just drawing simple lines, just picking out those daily levels, you can see if it's worthwhile trading it or not. Okay, where were we? There was, I think it was this zone here. But you could do it for anything. Okay, you can check if this was also a swing day. So let's see if the 9th of November or the 10th of November was a swing day, and that's 2023. So if I go into November 2023, hopefully we'll find it. Okay, so what was the date on that? That was the 9th and the 10th of November. So we're looking for the 9th or the 10th of November. Let's load them up. And we also want to see it on a, that's your Monday. So Monday, Tuesday, Wednesday, Thursday, and Friday. So, okay, it's Thursday, Friday. Let's see if NASDAQ had a Thursday or a Friday. There you go. It had a Thursday. Okay, so we had a Tuesday and a Thursday. Tuesday would have been the 7th. So the 7th and the 9th. That's your 9th. And this is your 7th. And the 7th made the high. Let's make this a little bigger. Remember, the swing days are for intraday trading. Okay, so, you know, we're not expecting major swings, but we're expecting swings for us to trade. So that's the high. Market sells into the Thursday. Thursday makes a swing day again, the low, and then it takes off again. All right. So I hope this makes sense to you. But that's how it is. Remember, we're taking the bias from the technical analysis. So the market broke out. A good buy kiss here at the lows is where we'd like to go. And then you can check Friday the swing hours to go. All right, so let me get rid of this. On the 10th of November, so let's check out the 10th of November, which will be a Friday. And then on that, let's go one back, the 10th. So you'll be checking out the hours of when to do it. So these are the New York hours, okay? So 5:45 to 6:15. Let's see if it's going to be in that zone. I'm just going to get rid of that so we don't get confused. I'm just going to turn this into a 4-hour chart, and we're going to come back into November 2023, hopefully. November. Not this one. Is this 2000? This is 2022. So we have to go into. The reason I'm taking the time to do this is so that you can really understand what's going on. Once you got your technical analysis, you got your swing days, okay, then that's it. So this should be 4 p.m. my time. That's it. This is New York. This is London, 12. Okay, this is 12 o'clock. So 12 to 4 o'clock. Okay. And then 12 to 4 o'clock. That's 5:45. Okay. Which is normal because it should be 4:45 on the platform. During the winter, the platform is 1 hour behind. Okay. So then on the 4 o'clock, so this is actually 5 o'clock my time. Okay. The market will push up, as you can see. So then you know how to trade it off. And let's see if we had an earlier hour. We had 11:30. All right, so that's the London session. So London already starts to buy on that bar because that's 8 to 12. Okay, so hope that makes sense. You know, we're buying off the line, and we just drew simple lines, no big indicators, no all this kind of, you know, funny business with all kinds of colored indicators giving you signals and stuff. Just match your hours, match your days to price levels, and do it. Okay, you can pick any day and you'll see we'll probably have something around here. 31st of May 2024. So May 2024. Let's check it out. The more we take a look, the more you'll feel confident. Okay, so what was the date there? 31st of May. So 31st of May, 1st of June, we're looking for a swing day from around there. 31st of May. Okay, and when is Monday? That's your Monday. So the 31st is going to be a Friday. So I had Wednesday and Thursday for NASDAQ. Okay, so that's going to be the 29th and the 30th. Okay, 29th and the 30th. Whoops. 29th was the high. Okay, so the market swung down. Okay, so that was actually a swing day. So market coming down. And then this is your Friday, the 31st. So let's take a look at the next week. If we had Monday, Tuesday, because that's also relevant for us, because that's where the market is turning off. So Monday, Tuesday is going to be June, isn't it? So June 2024. And we come to the 1st of June. Let's load it up. Okay. So 3rd of June is going to be your Monday. All right, so if I move this here, okay, 3rd of June. Let's see if that was a swing day. There you go, Monday, Tuesday. All right, so basically that's it. So you understand, Monday, Tuesday, we're like, yeah, you know, flowing with it. Why? Because we came into this zone. See how it closed as the gap here. I will talk about gaps later on, like I said, so don't panic. I'm showing it here. Okay, there's a bit of a gap there. The market filled in nice and easy. Okay, and then we've got swing days going up. All right, I hope this makes sense. It's really, really practical. You don't have to be a genius. You just have to draw your lines and match them up. So a short summary here. Multiple time frames. We'd like to make sure we know where the market is going on the long-term charts. This is why we mark those levels. As we go from monthly to weekly to daily, as you can see, the range got tighter and tighter, which started to make more sense for us because we're short-term traders. We don't like to be in those big wide candles, so we can get in at a decent price. And then all we have to do once we move into the daily and our candles are really tight, what we'd like to do is match it to the swing day and the swing hours in the smaller time frame, so we can catch a trade in there with a tight stop loss. As you can see, if you do that, you're really trading with a very tight small stop loss, and you know your profit is huge. Okay, and the same kind of thing here again. See, this is where the market breaks out and it comes back and does a good buy kiss. And if once again, if we check the days here, that's the 7th of June. Okay, so the 7th of June, let's just check it and not be lazy so we can really get our heads around it. 3rd of June. Now 3rd of June was actually a Monday, wasn't it? So the 7th of June is going to be a Thursday. Okay, We didn't have anything on Thursday, so we just kept pushing up. So that's how it is. 3rd of June. 7th is going to be a Friday, so we didn't have anything. Okay, so once the market started going up, it went all the way into the end of the week, and that's all good. So then the next week you'll check if you've got a swing day, Monday, Tuesday. If it does, it's good because you're just going with the trend. Okay, and there we go. All right, I hope that was helpful. If you have any questions at all at any time, just reach out to me. I really want to make sure you understand this, and I want to help you go through the process so that it's helpful and beneficial for you.